So, there are many of you guys who are sitting on some massive gains, but we all know Wall Street is going to change on us, so we need to change up our strategy too. But do you sell? Do you go all in? What changes do you need to make to avoid disaster? So, I'll give you the 5 changes you need to consider making to get the most out of your portfolio right now today. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. So there's going to be 5 changes that we're going to talk about that you need to make to your portfolio right now. And the last one is absolutely critical. So even if you don't do the others, make sure you do the last one because it's absolutely critical. So number 1, change the level of risk in your portfolio. Ensure you have the appropriate level of risk in your portfolio. You got to do the analysis. You got to dig into it. You have to know exactly what that level is in your portfolio. Too many people have way too risky a portfolio still today, even after the disaster that was 2022 for everybody who had ultra risky portfolios. It's kind of like it's back again. And when I'm looking and I'm analyzing portfolios in my group and looking at a lot of other things of that nature, I am seeing repeatedly high risk portfolios, and a lot of folks don't think they're actually that risky. Basically, they'll have, for example here, 10 stocks, but 8 of those stocks are completely speculative, non-profitable companies or newly profitable companies, and their safe stocks are Tesla and Palantir, for example. Now, I love both of those stocks. Please don't get it wrong. I own a ton of both. You guys know that, but they are not safe stocks like an Apple or a Microsoft or a Walmart, especially when you have a completely speculative portfolio otherwise. Like I said, I own both Palantir and Tesla, but my other core positions are not speculative at all. Doesn't mean I don't have speculative stocks in my portfolio, but I'm not considering all speculative stocks. And then, they're either going to 100x or they're going to go to 0. That is gambling. That is not investing. And you have to understand that. Now, here's another question for you. Do you even understand the risks that are in your portfolio right now today? I mean, intimately, you know exactly what the risks are in your portfolio. And if I'm being honest, I don't think many folks do, because they aren't doing valuations, because they can't tell me that. So they have no idea where the risk actually is in the first place. They haven't done due diligence on their stocks deeply, so they don't understand what happens if X, Y, or Z happens to that stock or their industry, or just Wall Street beats it down for whatever reason. They're going to get scared because they don't know what they own. They don't understand what they own. They can't tell if a beatdown happens, is it opportunity, or is it basically just a stock that's really in trouble and you're in for a lot worse? Because guess what? That's what's going to be all over YouTube. That's going to be all over everywhere. It's the worst stock ever. We saw that with Meta, right? When it got down to 80, Palantir when it got down in $6, $7 range. Every single great company that got beat down into that same range that all the trash got beat down to, all of it's beaten down, but 60, 70, 80%, 90%, whatever the case is. Well, how the heck do you tell the trash from the other? That is where due diligence comes in, valuation and everything else comes in and tells you the answer to that question. But most folks are blindly following people on X or right here on YouTube, and it's impossible to identify risk in your portfolio if you aren't doing valuations, you don't have a plan, you don't have goals, and all that other stuff. So therefore, you were set up for a disaster, unfortunately, because you're banking on to the moon or a short mega gamma squeeze or whatever. You got to learn all this sort of stuff so that way you're not banking on that trash. And if you want it all laid out for you, complete with the courses, coaching, and a group of 6, 7, and 8-figure investors helping you do exactly that, I may have left something special for those of you guys down in the pinned comment who want to learn how to invest and actually de-risk your portfolio. We'll talk more about it at the end, but it's the pinned comment down there for those of you that are interested. Number 2, change your outlook on money. Here's a fact about becoming wealthy. You can't grow and build real long-term wealth without steadily putting money into your portfolio, into your investments. So many people view investing as a one-shot type of deal. Basically, I'm just going to throw money in one time and that's it. That's all I'm going to do. No new money is going to come in. I'm just going to throw it in there one time and it's going to 1,000x my money, and therefore I'll make a lot of money on the back end. Or they use investing to think that that will solve their money problem, which it won't solve your money problem. So what are they going to do? They're going to trade, right? I got a feel for this. I can get in and out. I'll buy it, wait for it to go on a run, then I'll get out. I'll wait for it to dip, and then I'll buy back in again. I see it all the time in my comments right here, even within my group. It happens. Now, thankfully, we were able to talk through that, but it happens. A lot of folks think that. And if you could do that with any sort of regularity over the long run, you would be there. We'd have trillionaire investors. If it was that easy to where, us right here, just a random guy right here on YouTube could just know, hey, I need to get out here because we're near top. And then I know it's going to dip. So I know I can get in right around here and I could just do that on rinse repeat. Wow. I'd be a multi-billionaire or trillionaire, but I'm not, because you can't do that with any degree of accuracy. And unfortunately, it's a false narrative because we look at a chart and the only thing, you can't see the future of the chart. You can only look back and you go, oh yeah, it makes sense right there. It ran up and I would have gotten out right there. And then I would have bought right around here. Maybe I wouldn't have timed the bottom, but right around here, it's all fool's gold. Hindsight, you always win. It's so easy to do in hindsight. In the moment moving forward, when you don't know the future, it is impossible to do it consistently over the long run. Will you win sometimes? Absolutely, but you won't win over the long run. Therefore, you need to solve the money problem. You need to eliminate something from your budget, right? Get a steady flow coming in each pay period into your brokerage account so that way you can invest, even if it starts off at just $100. Start small and build it, but it needs to be steady. I have done this for a long time. Every year I'm trying to add, whether it's $50, which my portfolio at this stage in life and all my different portfolios, it doesn't make a dent in them. It doesn't matter. But I know that effect of compounding and that effective habit of doing it over the past 25, 26, 27 years worth of adding $50 here, $50 there, it adds up over time into massive numbers over the long run. So don't think I got to have all this money. I got to somehow find 1,000. That's great if you can, but start at just 50. Keep stacking those wins into your portfolio there. That is how you consistently become wealthy over the long run. I know a lot of wealthy investors, and I don't know a single one that simply traded their way there, or they just threw in money one time and it just turned into millions of dollars over the long run. Now, yes, I've had investments where I put in a little bit of money. It turned into a lot of money over the long run, but I also wouldn't have all the rest of the things that I would have if I didn't consistently invest in between as well. So get that out of your head. You have to continue to consistently add to your investing stack. So number 3, change the mix of stocks to meet your goals. All right, I'm going to start this off right here with examples to just kind of illustrate the point, because I think it illustrate it better than I can talk about it. We have members that jump into my group. They're young, right? And they want a multi-million-dollar portfolio in the future, but they're looking at stocks like Walmart or another dividend play in order to, basically achieve that goal. And then we have other members on the other side of the spectrum that are retired and they're looking for income, but they own all high growth stocks instead of dividends or REITs. That doesn't make any sense, because you're retired, you're looking for income, but yet you don't own any stocks that, obviously give you income in retirement. And the same exact thing with a young person looking to grow their wealth. I'm sorry, there's no chance at a 10x in a Walmart, for example, or, even more importantly, getting that 50,000% return in a stock like Apple, or that 100,000% return in a stock like Nvidia over a 20-year period. But you can't get that in a stock like Walmart. It can't happen anymore. You've got to be going after those growth stocks. That is why goals are so critical to letting you know, is this stock the right stock for me or not? It's kind of the baseline. You have to have it in order to even know, is this stock the right stock for me or not? I'm sorry, Tesla is not the right stock for everyone. Just like a great dividend stock is not right for everyone either. Goals tell you what is right and what is wrong for your portfolio. Not me, not guys on CNBC or anywhere else. Your goals will determine what is best for you to own in order to hit your goals. If you don't have goals, set them. Do it right now. And if you have goals, assess your goals and then buy the stocks you own that align with your goals, that can get you to your goals. Not just, hey, it's a great stock, everybody loves that stock. Doesn't freaking matter one bit. Buy the one that absolutely gets you closer to your goals and can get you to your goals. Number 4, stop looking at your portfolio. I know this one's a little bit controversial here because some folks want to look, and I'm not saying you can't look. I'm just saying it makes it a heck of a lot easier in order for you to effectively invest, especially during tough times and even during great times like we've enjoyed right now. So for example, it was so easy to buy the dip in 2022 because I didn't look across all my portfolios and see what happened to their balances as the market went down significantly in 2022. I had no fear whatsoever. I was excited. You can ask group members who were in the group during the time. They can absolutely verify it for you. I was excited every single day. I had hundreds of buys during 2022. Never put any more money in the stock market than I have that year because I never looked. I didn't know that I was probably most likely down 7 figures plus at some point in time or another during that time frame. I had no idea. I never got defensive, and I instead went on offense. And it has paid off massively as I put more money, like I just said, into the market in 2022 than I ever had before. And I've enjoyed the massive run in 2023. And I put even more money in the market in 2023, and I got to enjoy the massive run in 2024, put even more money in the market in 2024, and now I'm getting to enjoy the massive ride here in 2025 so far. But looking at my portfolio, that wouldn't have happened. I may have hesitated. I may have gotten a little bit more defensive. I may not have been as aggressive in 2022 if I would have looked and known what the actual numbers were and how much pain was actually being experienced in my portfolio. And this also works in reverse as well. Looking at your portfolio and being up big can give you overconfidence, right? Now you get a little bit lazy. You start off doing a lot of work, a lot of due diligence, and really digging in because obviously, when it's kind of like 2022 timeframe, man, there's a lot at stake here. I've really got to make up some ground. I'm really down. I've really got to make sure I get this right. Well, when things are going up and you kind of get a little bit lazy and it still goes up, well, guess what? That reinforces very poor behavior. And before you know it, you start not doing the work. Or what's even more dangerous is you start taking on more risk because you overestimate your skills and you get away from the fundamentals. Or I've seen this before too. I've had these conversations with folks. You start to think you can get 80% returns every year because, hey, guess what? It's been a wild past 5 years, but we have a lot of folks that are averaging that style return every single year. Looking at your portfolio can make you think you can do that every single year. And I'll be honest with you guys, great job. That is awesome. But that is not sustainable over the long run. And more importantly, you will make poor decisions that will start even destroying that 80% return. It's a confluence of a lot of different factors, but we all know it is not sustainable. The market is a marathon. It's not a sprint. And for me, I find it easiest to just make good decisions and not get too high on myself, right? Not think I'm the greatest thing since sliced bread whenever the market's running, or get real defensive, get scared, let that fear creep in. The way I eliminate both of those emotions is I simply don't look in the first place. And the final change that is so important is to clean up your portfolio. It seems like a lot of folks today have bought a lot of hype stocks, chasing this hype stock and that hype stock once again. It is happening. It's basically like 2021 all over again. Now, some of those have paid off, others of them not so much. And honestly, maybe you have some holdovers from 2021 and they're trash companies and they're not going anywhere despite this incredible market we've had the past 3 years. Excuse me, if I could talk. Despite the great market we've had the past 3 years, they haven't moved and they're trash companies. You figured out how to do due diligence. You understand the mistakes that you made and you need to just move on from those stocks. Now, on the flip side of that, maybe you just own too many stocks, right? We've had group members that joined with over 100 stocks in their portfolio, which basically just means they're an ETF. They should have just bought an ETF and moved on. It took a while, but we managed to get those members down to much more manageable levels. But if you own too many stocks, it is time to get rid of a lot of those stocks because you have to do due diligence. In order to be a competent investor, you have to do due diligence. You have to be listening to every single earnings call. It is impossible to listen to 100 plus earnings calls, dive into their financials, do all the analysis and everything else. And no, you're not hacking the system by listening to an earnings recap or something else of that nature. You have to do your own work. You have to get in there. You have to listen to the entire call. You have to go through the entire slide deck. You have to go through all the 10Ks and the 10Qs and everything else that gets released. All that work on 100 plus stocks, unless that's your full-time job, it is impossible to do. Bottom line is, sometimes you need to clean it up, and right now is a great time to clean out your portfolio, get it refocused, get it where it needs to be, so that way you can take advantage of the next market cycle. Whatever the heck happens, you will be ready. And if you don't know how to do due diligence and you want somebody helping you through all of that step by step, I may have left something special down in the pinned comment where you get free courses, free coaching. You get direct access to me anytime you want. Jump on our live Q&As. Be a part of the best 6, 7, and 8 figure Discord out there. Guys, there's so much going on. So many people helping you. So many, 2, 3, 4, 5 videos a week that I release just simply in there. So many other things going on in there just simply for the group. Check it out. It's the pinned comment. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.